Good morning and welcome to my office. Let's get started.
The London Bullion Market Association is officially breaking. If you are holding paper silver right now, you have less than a few weeks to secure physical metal before the window completely shuts. India just executed the most aggressive drain of physical silver since the Hunt brothers cornered the market in 1980. This is not a temporary spike in demand. This is a coordinated sovereign-level accumulation that is mathematically destroying the Western pricing mechanism. While you were distracted by domestic economic data, Indian importers quietly removed thousands of tons of physical silver from London vaults. They are not trading futures contracts. They are chartering cargo planes, loading them with silver bars, and flying them directly to New Delhi and Mumbai. Once that metal enters the Indian domestic market, it never returns to the Western financial system. It is permanently removed from the fractional reserve paper scheme. To understand why this is the biggest supply crisis in 45 years, you have to look at the scale of what just happened. In the late 1970s, two Texan billionaires tried to corner the silver market. Their buying forced the price of silver from $6 to nearly $50 an ounce. The establishment panicked, changed the trading rules, forced liquidations, and crashed the price to protect the banking cartel. But today, the buyers are not two rogue billionaires. The buyer is a nuclear-armed economic superpower with over a billion citizens. Wall Street cannot change the rules on India. They cannot force a sovereign nation to liquidate its physical holdings to bail out paper short sellers. The leverage in the London and New York markets relies entirely on the assumption that nobody will actually ask for delivery. India just called their bluff on a massive scale. Why is India buying so aggressively right now? Because they understand the global industrial trajectory better than the West does. Silver is the irreplaceable conductive heart of the green energy transition, the electric vehicle revolution, and very advanced military technologies. India is rapidly industrializing and building out massive solar infrastructure. At the same time, Indian citizens are traditionally the largest buyers of precious metals for wealth preservation. When you combine sovereign industrial stockpiling with retail panic buying, against currency devaluation, you create a demand shock that the current mining supply simply cannot accommodate. The global silver market has been in a structural deficit for 5 consecutive years. We are consuming roughly 200 million ounces more than we mine every single year. Until now, that gap was filled by draining the massive above-ground stockpiles held in London and New York. But the LBMA vaults are now reaching critically low levels. When you subtract the metal that is already spoken for by exchange-traded funds and private wealth clients, the actual free float of physical, deliverable silver is vanishingly small. India's recent purchasing spree effectively wiped out the remaining buffer. This means the pricing power is permanently shifting from the Western paper markets to the Eastern physical markets. We are about to witness a violent decoupling. When industrial users in Europe and the United States realize that the London vaults are functionally empty, panic will set in. Corporations like Tesla and major solar manufacturers operate on just-in-time inventory systems. They do not hold years of silver in reserve. When their procurement officers cannot source the physical metal required to keep their assembly lines running, they will not care what the paper spot price says. They will bid the physical price up to whatever level is necessary to secure supply. This is how a short squeeze transitions into an industrial panic. The last time we saw a dynamic, even remotely similar to this, silver surged over 700%. But the fundamentals today are vastly more explosive. In 1980, there was no solar industry. There was no electric vehicle industry. Silver was primarily a monetary metal and a component in photography. Today, it is a critical strategic resource, and the East is hoarding it while the West is printing fiat currency. You must position yourself before the industrial panic becomes mainstream news. The moment the financial media starts reporting on the LBMA inventory crisis, the physical premium will skyrocket. The bullion dealers will be completely sold out of retail investment products. You will not be able to buy an American Eagle or a Canadian Maple without paying a 50 or 60% premium over the spot price, assuming you can find one at all. This is the exact pattern that plays out before every major commodity supercycle. The smart money moves quietly draining the physical inventories, while the paper price is kept artificially suppressed to facilitate their accumulation. The India shock is the final catalyst. It proves that the era of Western paper dominance is ending. If you want to protect your purchasing power and profit from this historic wealth transfer, you must act immediately. Liquidate any exposure you have to unallocated silver accounts. Exchange traded funds that do not offer physical delivery and leveraged futures contracts. Those paper instruments will be settled at a severe discount when the system breaks. Take the capital and acquire tangible physical silver. Store it in a secure location under your direct control, or use a fully allocated segregated private vault. Do not trust the banking system to hold your wealth during a sovereign-level liquidity crisis. The window is closing. The metal is moving east. The biggest supply crisis since 1980 has officially begun. Do not be the exit liquidity for the bullion banks. We have to look closely at what is happening behind the scenes. For decades, the London Bullion Market Association has operated as the ultimate backstop for global precious metals trading. It is the clearinghouse that gives Western financial institutions the confidence to write hundreds of millions of ounces in unbacked paper contracts. They rely on the assumption that there is always enough physical metal in the OSJ vaults to satisfy the tiny fraction of investors who actually demand delivery. But India just broke that assumption. By importing thousands of tons of silver in a matter of months, they have exposed the fractional reserve nature of the entire system. Think about the mathematical reality of what is happening right now. Global mine production is roughly 830 million ounces per year. Industrial demand, investment demand, and jewelry demand consistently exceed 1.2 billion ounces. That creates an annual deficit of nearly 400 million ounces. The only way the market has balanced itself in recent years is by depleting the LBMA and COMEX inventories. But you cannot drain a finite physical vault forever. At some point, you hit the bottom. And when you hit the bottom, the paper pricing mechanism collapses. This is exactly what the smart money is pricing in today. They are not waiting for the official announcement that the vaults are empty. They are front-running the inevitable. When you see sovereign nations accumulating physical commodities at this pace, it is the ultimate leading indicator of a systemic currency crisis. India knows that the Western central banks are trapped in a debt spiral. They know that the only way to service the massive sovereign debt burdens is to aggressively devalue the currency. And they know that holding dollar-denominated assets or unbacked paper contracts is a guaranteed loss of purchasing power. So they are converting their surplus capital into tangible real-world assets that cannot be printed or defaulted upon. Silver is the perfect target because it is both a monetary safe haven and a critical industrial component. By securing their physical supply, now they are protecting their industrial base and their national wealth simultaneously. This is the hidden geopolitical war that is being fought right now, and physical silver is the ultimate prize. You have to decide which side of this wealth transfer you want to be on. You can continue to trust the paper illusion and hold your savings in fiat currency, or you can follow the actions of the sovereign whales and secure your own physical metal. The choice is yours, but the time to make that choice is rapidly running out. Do not wait for the mainstream media to tell you there is a shortage. By the time they report it, the price will have already doubled or tripled. Position yourself today before the London vaults are officially drained. The India trigger has been pulled. The supply crisis is here. This video is for educational and informational purposes only. It is not financial, legal, or investment advice. Precious metals and macroeconomic trading involve extreme risks, including the total loss of principal. The creator of this video is not a licensed financial advisor. All data is sourced from public market records, macroeconomic reports, and historical precedents. Past performance does not guarantee future results. You must conduct your own independent research or consult a licensed professional before making any financial decisions. The following are the verifiable sources used. Source 1 is the London Bullion Market Association Vault data tracking physical silver inventory depletion. Source 2 is the Ministry of Commerce and Industry of India detailing historical and current physical silver import volumes. Source 3 is the Silver Institute Annual World Silver Survey detailing structural supply deficits. Source 4 is the historical data regarding the 1980 Hunt Brothers silver squeeze and subsequent COMEX rule changes. Source 5 is the Federal Reserve Economic Data tracking currency devaluation and industrial production metrics. Protect your wealth and take action immediately before the system fundamentally breaks and leaves retail investors locked out of the physical market.